What is going on, YouTube? Welcome back to the channel. It's been a couple weeks since I made a video. My apologies for that. Just been crazy busy. But I do want to make this video because a lot of you guys have been asking me what exactly are my settings on the volume profile. And really, I can't believe it took me this long to finally sit down and make this video. So my apologies for that. But I am going to give you guys the exact settings that I used to get the previous day's value area high, value area low, and point of control, which, as you already know if you've been watching me, are my three key levels for any given trading day. Number one, they help dictate my directional bias, which is extremely important. Number two, they just give me high probability levels to be trading off of, and we all need those. We need those key levels, right? But before I get into that, just real quick, I do need to talk about this Top One Futures promo. They're offering like a pretty crazy deal right now. So they're letting you trade 7 instant funded accounts or straight to funded pro accounts, and you can get 45% off for that with the code ZARB. That is ZARB. Link is in the description of this video. Really crazy way to scale. I don't think there's another straight to funded prop firm that is letting you trade that many accounts. So I'm going to be stacking up. I think it's a pretty crazy opportunity. But anyways, let's get into the charts now. I will be giving you guys the exact settings I use. And then, of course, we'll go over some chart examples of how exactly do I use the volume profile in my personal trading, which really is my edge. So I'll be giving that out right now on YouTube for free. So stay tuned. All right, so to get started, let's talk about the actual indicator that I am using for my volume profile trading, because you actually have a few options, right? You have 3 different tools that you can use on TradingView to look at a volume profile. You have the VPVR, you have the fixed range, and you have the session volume profiles. What I use and what I teach here on my channel is how to use the session volume profile tool. Now, all 3 of these tools are really beneficial in their own way, but I use the session volume profile for 95% of my volume profile analysis. And I really think it is the best tool for beginners simply because it is going to plot the profiles of each trading day automatically on your chart. If you're using something like a fixed range, you can actually pull a volume profile for any type of customized range that you want. And while that's really cool and can be beneficial because you can really pinpoint what you want to be looking at, it's a bit more advanced. And again, I'm being honest, I have studied all 3 ways to use the volume profile. The fixed range is great, but even to this day, 95% of my volume profile analysis comes from the session volume profiles. So, at the end of the day, sometimes keeping things simple is the most powerful way to keep your trading coherent. So anyway, though, if we go here to our indicators tab on TradingView, type in SVP, you'll get your session volume profile, and boom. Like I said, all of our profiles are automatically plotted on the chart. Now, first off, what is this histogram right here? This is your volume profile. If you notice, each profile starts at market open, so 1800 hours or 6 p.m. Eastern Standard Time. When that market opens up, we will begin building out a new profile. As the day develops, the profile and the volume is going to consolidate at a certain point. Now, this red line right here is your point of control. This is the level on the chart that has had the most volume conducted for that trading day. And it is the most important level. And I'll get into that in a little bit in this video. Now, your value area high is going to be your other important level. And that is the highest point of the trading range that had the most volume conducted. And the value area low is your 3rd key level. And pretty simply, it is the lowest portion of the range that had the most volume. This consolidation in the histogram right here is our overall value areas. So you're going to need to understand that when I get into the settings. So first off, most important setting that you need when it comes to the way I use my volume profiles is you want to have the sessions on all right? You don't want to be looking at this by only looking at like the New York session or only looking at pre-market. this is a big reason why people get different levels than me. And again, there's no right or wrong way. You can use the volume profile for just the New York session. But I promise you guys, I've used every different type of customizable way to use the profiles. And this is how I get the most accurate levels using all sessions. So that'll include the Asia, the London session, and the New York session. And for me, it really makes the most sense. 10, 15 years ago, a lot of people, when volume profile was first starting to be used, and market profile, they only looked at the New York data because they said, the overnight sessions have such a small amount of volume that it's just not necessary to look at that information. We're in 2025 now, right? We are in a globalized world. The markets, especially the futures market, is totally globalized. There are people trading all over the world, and they trade the Asia and London session. In my opinion, if you're not looking at all of the sessions, you're just giving up 2/3 of relevant data. So that's kind of the philosophy for me. It makes the most sense to be looking at all of the data. And again, I've tried everything. I get the most accurate levels like that. So this is the most important thing to be using to get the levels that I get. Now, number 2, the second most important setting on my profiles is the value area volume. So I use 68. Now, the standard is 68 or 70. If you use 70, you're going to get a little bit broader range in your value area. Again, this is the value area. So this is the point that had the most volume conducted on, in my case, 68% of the trading range. You could use 70%. The difference in these levels is minimal, but again, from my experience, you're going to get more accurate levels using 68. Now, I can define what the value area is for you guys if you are totally new to the profile. Let me pull this up. So what is the value area on a volume profile? This shows the price range where about 70 or 68% of all the trading volume happened during a session. Now, it's basically the zone where buyers and sellers agreed the most, right? Why did they agree the most? Because this is where most of the volume happens. This is where most of the trading activity happens. So it's essentially showing you where there is fair value for the market on that day. Now, the edges of that zone is going to be our value area high and value area low, right? Which often act as key support and resistance. And that's why we mark those out, because it is showing where the market moved from balance to imbalance. So that's a quick definition. And again, we use the value area high and low as key support and resistance levels. We also use it as a way to dictate our directional bias. Now, the point of control is the overall point of the range that had the most volume conducted. So it really is, if you had to pick a most important level, it would be the point of control, but do not sleep on the value area high and low. I take great trades, high probability setups off of those two levels as well, and they can really help dictate the directional bias. And I'll get into that in just a moment. But last thing on the settings, the rest of this is mostly going to be aesthetics, but I'll still explain why I use it the way I do. So if we scroll down, you can either have the option to extend your point of control. So like if I click this, see how it extends the point of controls to the right? Again, I just don't really see the need in it because I'm not looking at my charts with these profiles on all day, right? As you guys know, I just mark the levels with like a horizontal ray, and then I get rid of the profile. I like to have the cleanest chart possible, and looking at the profile all day while you're trying to trade, it's a bit messy for me. So that's why I just don't have any need to extend the point of control. You could also extend the value area high or the value area low, and it will extend those levels out for you. But again, that's mostly aesthetics, but that's why I don't have any of these checked off. Input values, this is just, the standard, so just keep that checked. The style, again, the volume profile, you obviously want that up there, so that's going to stay checked. The width of the box, again, that would be here. I use 30. I keep it placed on the left, but you have the option to place it on the right. Again, that's just personal preference. And again, you could have the value area high and low marked off like this so it's more clear. I don't see the need. I don't need that, but I do like to keep the point of control right there because it's a nice strong red line. I know where it is and I can mark that level off quick, and it is the most important level on the profile. All of this, if you want the developing point of control, that'll just show where the market or where the point of control originally was. Because again, as the market is developing on a current profile, these levels are subject to change as more trading activity occurs. So if you see here, this is where the market opened, and it showed where the point of control was at first. And as the market moved down, the point of control moved down with price. You had a couple of times where it moved up a little bit, but then stayed going down and closed right here. I use only the previous day's profile though. So when I'm trading, I'm not looking at the current day's action. I'm not looking at the current day's profile. I like to use the previous days because they help dictate my bias, and they're static levels. They're not subject to change because that trading day is already finished. So that is why we use the previous day's profiles instead of the current developing days. And then visibility, you don't need to change anything here. Just keep that all the way it is. But those are my settings. So now once you guys have that on your chart, when you're trading and doing your analysis, you will have the exact settings that I do, and you will be getting the exact levels, the exact point of controls, value area highs and value area lows as myself. And again, when we are doing our analysis, we like to look at our levels on the 30-minute time frame. Again, you'll get the most accurate levels using the 30-minute time frame. I've already explained why. But enough for that. Those are my settings, and now let's get into some chart examples. All right, guys, let's get into some chart examples now. So let's just first talk about how I mark my levels at the beginning of the trading day on the volume profile. So we'll pull up the session volume profile indicator, and you guys already know how I mark these levels now. Let's actually let's rewind right here, because this is going to be the price action that we're analyzing for the day. So if I play out a little bit of this is the new trading day. So if I'm going to be trading on this particular day on June 17th, you can see right here, 1800 hours, 6 p.m., market opens back up. We start building out a new profile. So if I'm trading on Tuesday, June 17th, I'm going to be looking at June 16th's volume profile for my key levels. So that's right here. And let's just mark these off. So I do this every single morning before I take any trades. I have to mark out my key levels. So I will mark out the previous day's value area high, which will be right here. I mark off my previous day's point of control, which will be right here. And our previous day's value area low coming in right here. Now, once I have those levels, I do not need to keep looking at the session volume profile indicator. I can just get rid of it. I don't want to keep my charts muddied up with extra information. Like I said, I want to keep things as simple as possible for my own trading, and especially for my education. There's no reason to just keep looking at that profile. We have our key levels on the chart now. So market opens right here, and we're just going to run through the Asia session and the London session because, you know, I trade New York. I think most of you guys are trading New York session. So let's just play out some of this price action and get to New York open. Almost there. Got a couple more candles. 8, 9 a.m. Okay, 9 a.m. Perfect. So first off, what can we dictate based off this hourly time frame? Well, number one, what kind of trend are we in? We're pretty much in a consolidation, right? We're in an overall hourly range. So when we are trading in more higher time frame ranges, we can be a bit more neutral on our directional bias, at least higher time frame. You know, a good rule of thumb is to pull a Fibonacci retracement and look for that 50%. Anything above the 50% retracement in a range would be your premium. So it would be easier to short when above the 50% in a range. And anything below it would be your discount, which would make it easier to go for longs, you know, when you are in the discounted portion of the range. So that's one thing to go over. But, you know, on my intraday trading, I'm more focused on this 15-minute structure here. So based off the 15-minute structure, I would say we are actually more so in a downtrend. If you see right here, we kind of started off with a market structure shift right here, because this is the last higher low that made a new higher high, taking out this recent high. So we have a 15-minute market structure shift here, and since then we've had pretty bearish order flow, right? You know, we have some consolidation, some internal ranges, But at the end of the day, bearish levels are being respected. You see right here, we have this 15-minute fair value gap. We kind of sweep out this liquidity here, sweep out some liquidity, but ultimately hold this bearish level and move lower. We get a break of structure right here, taking out this low. That would be our break of structure, signaling a continuation. Let me mark that off. So I want to stick to shorts simply based off the 15-minute structure. It's a good rule of thumb to go by. But on top of that, what else do we have? We're below the previous day's point of control. You guys know my golden rule. If we are trading below the previous day's point of control, then we want to stick to a short bias. If we are trading above the previous day's point of control, then we want to stick to a long bias. This general rule of thumb, I call it my golden rule. It will keep you on the right side of the market 8 out of 10 times without any other analysis. Like before you do any other analysis to help pinpoint a directional bias or an entry, if you stick to that general rule of thumb, I promise you it'll keep you on the right side of the market very often. So we're going to stick to a short bias because we have two levels of confluence. 15-minute downtrend based off the structure. Number two, trading below the previous day's point of control. So we're just going to stick to the 15-minute time frame here because really what I want to show in this portion of the video is really just how the levels and price interacts at those levels, all right? So let's play out a little bit more of this price action. So market opens right here, and what do? We immediately run up. So this is looking very bullish. Now, I don't want to make this video too complicated, but we did have an 80% setup in here, right? If you guys know about that. Market opens right here. We never engaged the previous day's point of control. So what do we do at market open? We run straight up to this level. Let me play out one more candle. And we engage the point of control, fulfilling the 80% setup. But again, I want to make this video a little bit more simple. Golden rule. We're trading below the previous day's point of control. We want to stick to a short bias, right? If you're interested in the 80% setup, go ahead. I will put a link to the video in the description of this video if you want to check that out. But for the purpose of this video, let's stick to our golden rule. We want to look for shorts to the previous day's point of control, or as long as we stay below the previous day's point of control, excuse me. So what are we going to do first here? Well, I need to find an entry and I need to find a draw on liquidity, right? We're pretty much at my line in the sand. If we start going much higher and get above that point of control, I really just need to scrap my short bias. But as long as we can reject from here, I can start, looking for a high probability short trade based off the confluence. So what do we have? What can I look at to use as a potential entry technique? Well, we have this bullish fair value gap right here on the 15-minute time frame. As you guys know, one of my favorite entry techniques is the inversion fair value gap. So that would be where we invalidate a bullish fair value gap in this case and close beneath it. So we could use that as our entry technique. And what can we use as a draw on liquidity? Well, if we pull up our sessions indicator, this marks off my Asia and London session. Asia's blue, London session is green. And I can see that we have not swept out the Asia session low. So this can become a pretty strong draw on liquidity for me, right? Asia session low. Let's mark that off. Oops. So now I have a draw on liquidity down here. Again, I'm not just going to blindly target Asia session low because it's there, but I'm using the confluence that I already have. Number one, zoomed out, we are in a 15-minute downtrend. Number two, we are trading below the previous day's point of control. So I have two strong reasons to lean into a short bias instead of a long bias as long as we stay below this level. Number three, have we taken any type of liquidity? Yes, we swept out this very clear swing high. So we have taken liquidity. And also, if I want to get into some higher time frame analysis, we also have a 1-hour bearish order block right here. This would be a 1-hour bearish order block. So I could look at that as well as a higher time frame key level. But, just a ton of confluence here. Ton of confluence to want to stick to a short bias. But I now need my entry. That is the last piece to this puzzle. That'll be this inversion when we get it. So nice rejection first off, right? If we just look at that, I mean, just hit the point of control to the tick and start rejecting. And this is not a cherry-picked example, guys. You will see this time and time again where the point of control offers accurate, just extremely pinpoint accurate levels to trade off of. So right there, we got our inversion. This would be your entry right here. Closure beneath this bullish fair value gap and validating it. I also really like this entry because I have a clear stop loss. So I can use the most recent structure as well as my stop loss is a couple of ticks above the point of control. So I'm really leaning in to the idea that we should not trade above the previous day's point of control now and stick to my short bias. Now, as far as targets go, we know we have an Asia session low as our target, but do we need to hold all the way down to Asia session low? You know, not necessarily. That depends on the type of risk reward you like to go for and the type of trader you are. If you want to go for 1R and take your low hanging fruit, just play this out. Boom, you got your 1R. If you want to go for 2R, boom, you get your 2R right here. I'm the type of guy that usually goes between 1 and 2R. I don't like to go for much more than that most of the time because even if, like, let's say we do end up taking the Asia session low, look at all this chop you have to deal with. There's a lot of chop. Sometimes it's easier to just get in and get out. But if I do play the rest of this price action out, we do take that Asia session low quite nicely and then reject. Now, a couple of rules of thumb are just really like helpful things to stay focused on to not get scared out of a trade. Once we get that inversion of that fair value gap, you ideally do not want to see a closure back above the inversion, right? So even here, I mean, this was a pretty choppy day, but look at the way the market wicks above that inversion fair value gap and then cannot close above it. It tries again right here. We wick through that fair value gap, but we cannot get a closure above it. Then a strong rejection straight to our external drawn liquidity. And at that point, in my opinion, the objective has been made. We're coming in towards the end of the session, and there's really not another good setup at this point. But how did we find this setup? Let's just go over it one more time. Number one, 15-minute downtrend. Following the 15-minute structure will always put you on it'll put you on the right side of the market and you'll have an easier time following that trend for intraday trading. Number two, we are trading below the previous day's point of control, so we want to stick to a short bias thanks to our golden rule. Number three, we need an entry. We use the inversion fair value gap. And then number four, we need a draw on liquidity, being that Asia session low. Again, we don't need to hold for the Asia session low, but if we can get good risk reward anywhere in between that external draw on liquidity, we take that money and we get in, get out, and find another trade tomorrow. And that is how you do it. That is how you get the exact levels that I have using the volume profile. And this was just a quick example of how you can use it to dictate your directional bias. And number two, use it as a level to trade off of for a rejection. And that's going to be it for this video. Check out the next one coming very soon, and I'll catch you next time. Peace, guys.